Good morning, everyone. My name is Anne-Marie Band. Today is Tuesday, May the 30th, and this is the MoneyBall morning report for the Benzinga Pro platform. We actually will be going behind the paywall with this morning report at the beginning of July. So this will be the last time, this will be the last month that we will be able to talk about these things. Everything else will be going live in Benzinga in the morning. So just giving you a heads up there, let's take a look at what's going on with the SPY. We closed the week at about 420. We're up at 422 this morning. This is a gap outside of the range. We tried to close it in the overnight, but still holding steady. We've got quite a bit of news coming out this morning, and let's have a peek at all of that very quickly. That news starts with the Case-Shiller Index, which just came out at 9 o'clock. It's not really doing anything to the charts. We have some ECB. We have House Price Index year over year. And that is really not moving the market, which I find to be very interesting. At 10 o'clock, we have the Consumer Confidence Report. And yeah, that's about it. We have some auctions that will come out in the afternoon as well. So what are we looking at? Well, we're looking at a breakout formation. It did the same thing that we thought it would. Big move up, big move down. And so we had the big move up, big move down, another big move up. It happened in one day, right? What had taken us almost 2 days, we really ended up recovering in one day, and now we've got a breakout formation. The next line in the sand is 424 and then 428 from this sideways formation. If we take a look at the base of this, I'm going to delete this, move this horizontal line. What we're seeing is that the price action should be holding somewhere in the region of 41.19 to 41.18, but I do expect the same kind of motion. Big up, big down, big up, several days holding the formation, and then another rise. So I do not believe this price action is going to change. It's going to be up, collapse at the top, and then back down. Overall, it is still grinding to the north, but that is what we are looking at. 424, 428 in the near term, but it seems very likely to me that we could come in to the 417 area. Let's take a look at the Qs. The Qs have been exploding higher. We came in just as suspected, but spent very little time there. We're now 4 days, today's the fourth day, moving up into the 353 area. 357 is this next zone, although I do believe 345 is the area that we should retrace over the next coming days. Where are we? Very, very bullish. If we hold 349.50, or we come in to test that zone, we should find buyers there. We could have a little bit of sideways action. There's a lot of stuff going, but the AI train is in full-fledged move, and a lot of us who've been trading a long time, it reminds us of the dot-com event where everything that had a dot-com on it was just blazing ahead. So let's take a look at the XPSL, because we haven't in a bit. We can see that last week we moved up into these edges near 77.50. This morning we're all the way up at 78.34. We did come into our line at 78.70. That's going to be a big deal, but this gap should fill in. So we are looking for a formation that allows us to see a pullback and then a rise forward. My thought is this, into the morning, any kinds of pullbacks that attempt to fill the gap but recover up over 77.82, going to be a long. Let's take a look at the TQQQ. also running an amazing amount, really stopped right at the top of something fairly important over the end of the week. That's right up at the 35 level. It is now well past 35 and into 36 and some change. So that is truly moving very dramatically in the early part of the morning. Pullbacks are buy zones here. If we come in and we cannot hold below 35.44, going to be a great trade. Right to the upside and continue. Levels above, we've got that 35 that we want to have us hold as support, and then 37.50, and then of course we just keep riding this train upward to the next tick, which would be 39.38. The the VIXM, which is really what I like to look at for the midterm spaces. You know, my thought is that it should have held 25.50. It has broken through this ledge. Now it's 25 that the formation is looking at for the floor. I am long in a small position here, but obviously I am on the wrong side of the trade because I am very likely early. But I do want to see this bottoming formation trying to hold 35. If it loses, see, it's below 25 right now. If it loses this area, I am going to get out of this position in the daytime on the bounce and then look for a bottoming formation on the dailies to give me a shot at hitting longer. But I am going to be looking at that through the day. All right, let's take a look at the ES. Running really hot, but below its opening tick. My supposition here is that this failure to come in and fill the gap is something that traders might want to do. I don't have any idea, but above 42.23, it's going to be very bullish. In my mind, this is a candlestick that's really not telling us too much from the last week because it gave us a lower high and a lower low, but it closed above 41.90, which is a very, very important line in the sand for us. Okay, coming into 2 more trading days left in the month, things could be very volatile as people move in and out of formations. Intraday traders are going to try and shove these charts into places that are going to surprise people and run the levels. My thought is, if you're looking long and you lose 40-20, step back and see if the chart is rotating. I like the double top short at the 42.40, which is where I am short from, with about a 4-point stop. Okay, but you can see the lines in the sand very clearly about where we're headed. A lot of people calling for 43 next. A lot of traders that are still short that are trying to get out of these trades. That's going to continue to move the market higher. Up here, we're well over the 14,000 level, which I thought would have been something that gave us a little bit of a push. I don't want to do that. Okay. Where did this go? There we go. And so we are looking at, hang on. What we're looking at is the chart really breaking out and up over this edge, 14,670, next line in the sand, and then, 14,900, and then 15,000. A lot of people are looking at these levels, right? Very big breakout. I mean a very, very big breakout. And so we must anticipate that our pullbacks are buy zones until we stop making new highs. And so that is very, very bullish. Last thing, I know the video's long. Let's look at the RTY. Small caps struggling, but still, let me remove. No, let's open this up. It's the volume bars. We can see that the traders are really trying to base here, holding over these edges. That is our weekly formation, a little bit higher, high, little bit low, low, but closing underneath it. And so we're still battling at this 1780 to 1790 zone. Okay, but price action is telling us that there is room to run. Pullbacks are buy zones. So where do we want to look at? 1771 for the continued move to the upside here. And we'll go from there. All right, folks, good luck trading, and I'll see you all tomorrow.